Okay, guys. Hi everyone. I'm going to have this brief webinar on it concerns the entries. First of all, it concerns the entries here. Uh, so I'm going to make your entries more precise, more selective, and more high probability. Well, that's what our objective is by having this webinar, guys. Um, First of all, I'm going to also give you some secondary analytic tools, indicators that you can utilize and incorporate in your trading now, because obviously you have learned the price action to get more confirmation on your trades. So I'm going to give you an indicator that I want you, all of you guys, to use, which is pretty effective as far as the trading is concerned. I've been using this in the banks for 2.5 years. Consistency is 80%. I had an EA developed, personally customized EA on the same phenomena and same methodology. It's been working consecutively successful since last 3.5 years, and I've never had a losing week, guys. So what I'm going to show you today, I have an EA exactly as such, which just trade with this strategy. So forget the noise, just follow the rules that I'm going to set it up for you with your knowledge, with your ordinary knowledge of the price action, and see if you can improve your results. Some of you guys are having problem with your entries and exits, and I've given them this strategy, and they came up to me after a week and they said their results has improved significantly. Because what happening is this: they became more selective in their trading. So when I say be selective in your trading, we take good high probability trades. The question is, how would you know this is high probability trade, right? It's very difficult. Anybody tell me, how would you take an high probability trade? Anyone? Speak up. Anyone?
Having a higher risk reward.
Yes, but that is when the trade goes into your favor, right? What if it doesn't go into your favor? There's no point of risk and reward here. So, and as far as the entry is concerned, how can you improve your entry and make it high probability? Anyone?
You can make higher probability by making sure that your entries are in a way of the market continuations.
It doesn't. Yes, market continuation. Yes, that's right. But again, it does not matter if you're reading the market correctly. It doesn't matter if it's continuation or reversal. Because if you read the market correctly, right, and you are taking high probability trades, then you have reversals in every trend. So you could be taking high probability reversal trades within a trend. So that argument that trading a trend is just high probability is wrong, by the way. Why do they say trade with the trend? That if you got stuck somehow in a trade, you will get out of the trade once the price continue into the direction of the trend. So that's the advantage, because if you're trading against the trend and it goes against you, then likelihood is the price will never return, because that isn't the trend of the price. Make sense? Make sense, guys? That's why they say trade with the trend. So if you got stuck in a trade, you will get out of the trade at some time because of the trend, because of the direction you was in. The price will come to that stage at some time. But if you're against the trend, trading against the trend, then what will happen? The price is going towards north and you're trading on the south side of it. The price is not going to go back to south again. You continue going to the north side, and then that's why you will eventually hit your margin call. Make sense, guys? That's why they say trade with the trend. But again, if it's high probability entries, it doesn't matter if it's trendy or non-trendy, guys. First of all, okay. So all of you, how many of you have completed lecture 2, please? Okay. Okay, this lecture 2. Okay, guys, first of all, in lecture 2, I had show you how to take a trade by using a tool which is called candlesticks. Candlesticks tells us take an, and I will be slow in my lecture because I'm not feeling well, but just listen, hear me out. Candlesticks is a tool which tells you either the buyers are entering into the market and sellers are entering into the market, right, guys? Say yes if you know this. Now, there are many candlesticks patterns amongst many. Name them. Come on, start naming them for me. How many candlesticks patterns? Name them. Tell me a couple of bullish and bearish patterns. See if you remember anything. Mhm. Good. Good, you guys remember. Now, guys, there are almost 17 candlesticks patterns that I've asked you to look into on the point of reactions and failures and take a trade if you see them, right? But then again, it's very vague. Some of them are very strong. Some of them works at times. Some of them doesn't work at times. Have you noticed? Some of them work. Some of them doesn't work at times. Even you have a chart candlesticks pattern, the price reverse at some stages. Yes. So there is a lot of noise even within the candlesticks patterns that I've asked you to trade with. And the problem is for you to distinguish how to take a high probability trade, which is the high probability candlesticks patterns, which I need to focus on to improve my trading. What Look, you take a trades on a 17 candlesticks patterns, you take a trade on high probability ones, you make the money. But then again, you are taking trades on other remaining ones out of 17, which are not high probability. You take losses, and eventually at the end of the day, you're not in profit or you're less profitable, and it really damages your confidence, right? Because you're doing the right thing, but what's happening is there might some candlesticks are not working at times. Yes. Yes, guys. Okay, now our objective is let's customize, compress, let's condense further into those 17 candlesticks patterns and come out with few which I want you to focus on and trade, and you will see your trading a bit improve 80%. You will see your trading significantly improve. So forget the noise on the even within the candlesticks patterns, and now you will be focusing on the one that I'm going to teach you. Understand, everyone? Say yes, please. Okay. Now the candlestick pattern which I want you to learn, we call it pin bar, guys. We call it pin bar, guys. Right? Anybody know what spin bar is? Okay, the candles with the wick are pin bars candles. Candles with the wick, guys. Simple. Candles with the wick. Ideally, in the bullish market, hammer is the ideal pin bar, guys. And in the bearish market, which is the ideal pin bar? Anyone? Shooting star, exactly. So that's your pin bar, guys. Now, guys, just see the rules of it. Try and understand the ideal pin bar. For identification purposes, hanging man is not a pin bar. The problem is the pin bar formation. You have to see. I'm going to discuss that in a second. So just leave it on the side. Focus on now. You're not trading hammer. You're not trading shooting star. You're trading just pin bars, guys. Pin bars. Forget everything else. Understand, everyone? Please forget everything else. Now, rules of pin bars, guys. Ideally, what is pin bar? The pin bar has to be at least two times of the body, two times longer. The pin has to be in length, two times of the body. So this is the body, guys. That is the ideal pin bar. This is the standard pin bar, right, guys? Understand? It length is two times of its body. Yes. This is an ideal pin bar, guys. Again, this is a weak pin bar, body and length of a body. The pin is exactly the length of its body, guys. This is also a pin bar, but not very strong. The ideal is at least two times or more. More, the longer it is, the better it is. But two times of its body. So, do you guys completely understand this? It's pretty easy. See the body and then look at the pin. If it's two times bigger than the body, okay, that's a pin bar, guys. Understand? Everyone say yes. Okay. In the bearish market, you will see a pin bar like these guys, right? So everyone completely understands? Say yes. So this is the candlestick pattern that you will be focusing on For identification purposes, it will have a wick 2 times longer than its body, guys. But that's what the standard pin bar is. If it is 1 to 1, body and wick is 1 to 1, it is also a pin bar, guys, but not might not be a very strong one. Ideally, I would rather have a pin, take a trade on a pin bar which is 2 times of its body. Are we clear on this, guys? 100%. I'll move forward then. Okay. Now, now, pin bars. With the pin bars, I want you to focus on another candlestick pattern, which is engulfing candlestick pattern. A candlestick with the big body represents the strength. So if you see a pin bar and also a bullish engulfing or a bearish engulfing candlestick, guys, we are happy to take the trade. Understand? Say yes, everyone. So forget the name. We need a candle with the body, candle with the bloody body. Small wicks doesn't matter, but candle needs to have a big body, substantial body, substantive body. Understand, everyone? Clear? Okay. Now, guys, if you have two pin bars together, it's a good trade. Understand? So two pin bars, more than two pin bars, excellent trading opportunity. See, okay, just write it down. If you have a pin bar, guys, two pin bars, a pin bar, and an engulfing candle, we are happy to take the trade. It's a good trade. So you guys understand? Pin bar, two pin bars, good trade. Pin bar and engulfing candle combination is a good trade, guys. Understand? Say yes, please. Okay, 5, 6, 7, how many? It doesn't matter as long as they are pin bars. That's good. Okay. So everybody clear? Rules, guys. Rules. Simple. The first thing is you will mark your charts exactly the way I've asked you to mark your charts, guys. I'm going to write the rules here for you guys to know. Mark your support and resistance, guys, as we did in lecture 1. Remember? Guys, remember? So the first objective for the first task is mark your support and resistance as we did in lecture 1. Point of failures, point of reactions, zones in the weekly time frame, guys. Understand, guys, as normally we did. Everybody clear on this? Now there will be, have the clarity on this. Have the clarity on this. The first trade will be the first kind of trade. There are two kinds of trade, guys. The first kind of trade is what? Trade when leg starts, guys. Right? Where the leg starts, the trade where the legs begins means the bottoms or the tops, guys. Understand this. You guys understand? Where the leg begins. It's not a continuation trade, guys. It is a reversal trade, guys. Where the leg begins. Understand, everyone? Say yes. So, guys, where the leg begins, let me give you an example of that. This is where the new leg begins. Right, guys? This is a new leg begin. Right, guys? This is where the new leg begins, guys. Everybody understand? So if everybody understands so far what I said, say yes, please. All of you guys, please. So this is the first kind of trade, which is picking the tops and the bottoms. Picking the tops and the bottoms. My advice is this, guys, for the trade 1. Always look for double tops and double bottoms, guys. Always. Never take a trade straight away. Wait for the formation of double tops and double bottoms. Double tops and double bottoms. Understand? Everyone understand this? Never take a trade without a double top and double bottoms. Make this a rule for yourself. Do not think that you're not going to have those double tops, double bottoms. The formation is more than 85%. 85%, guys. So double tops and double bottoms, simple. Everybody understand and clear on this. Make a rule. You will always wait for the double tops and double bottoms formation before you even take a trade, which is a reversal trade. Everybody understand? Okay, you will see improvement in high probability improvement in your trading. My EA is based on double tops, double bottoms, guys, on minute time frame. It always works. It bloody always works. Okay. Uh, Now the second is when you see a double top, double bottoms, guys, you will always take a trade after the pin bar formation, guys. Understand? After the pin bar formation, you will take a trade, guys. Do you understand this? Guys, you will take a trade after the formation of the pin bar. Pretty simple, right? Remember, your stop loss will be 10 to 15 pips below the pin bar, guys, depending on the time frame you're trading. Understand, guys? This is where your stop loss will be. Now, guys, there are three ways to trade the pin bars, guys. Three ways to trade the pin bars. You will be trading just one way, guys. The first way is after the pin bar close, you take the trade. That is one. So the pin bar closes, right? You open up a trade, stop loss below the pin bar. Understand, everyone? Say yes. This is the one way. This is the normal way I want you guys to trade on. I'm just gonna tell you three ways. This book, the standard three ways, guys. My EA is based on three ways. The second way is you have a pending order above here. You've got a pending order above the pin bar, guys. 5 pips above the pin bar, guys, and that's trigger the price goes up. Stop loss below the pin bar, guys. Understand? You guys understand? This is for those people who are trading daily time frames. So I see a pin bar close at the end of the day. I do not look on the charts every day, during the course of the day. All I do is after the daily close at 10 p.m. UK time, I see a pin bar, right? I put a pending buy above the 10 pips above the pin bar on the daily time frame. Stop loss below the pin bar. I just leave it there, guys. Guys, this system works 70%. 70%. Okay, you guys have heard of Patron Trader? Can anybody heard of the guy Patron Trader, guys? Steve. The only way he trades is using the pin bars, and the pending orders. So he doesn't trade during the day. All he does is pending orders above 10 pips above the pin bar, stop loss below the pin bar, guys. That is it. You guys understand this? He just trade daily time frame. He trades double tops, double bottoms formation, guys. Pin bars. He place a pending order above the pin bar, stop loss below the pin bar. That's what the signals he sent, and that is it. Understand, guys? That is it. His success rate is 65%, by the way, guys. Understand, everyone? Okay, I'm not asking you to follow him. I'm asking you to follow me here because my success rate is far better than his. I'm a better trader than his. He spent 33 years on Wall Street, guys. Yes. But still, what I'm teaching is far better, and I exactly know what other trainers teaching you. So I'm teaching you the combination of everyone, but which is the successful model here. So focus what I'm teaching. So there is a way to trade, which is put a pending orders above the pin bar, guys, and stop loss below it. So see if somebody cannot trade during the day. Is so busy, full-time employment, guys. All you need is if open up 21 charts at night, scan through your charts, right, and you see a pin bar formation on the support or resistance level, guys. Out of 21, you will find 3 to 4 pin bars, by the way, every night. All you need is to put a pending order above the pin bar, 10 pips above the pin bar, stop loss below it, and leave it and forget it and let it run the way whatever happens until the following day, guys. But that is a successful way. If you consistently use this strategy, you will be 60% positive in profit. 60% is the success rate. You will be 100% in profit because of the risk and reward ratio, guys, on the daily time frame. Does everybody understand this? Everyone understand this? So this is a method people uses who cannot trade during the day. It doesn't have any time, but there are rules to follow the strategy. Whoever wants to learn this strategy, just put a pending orders, right? And personally contact me next month. I will advise you of the pairs. I will tell you the rules. All you need is, but you need to have bigger accounts for that. The reason is that you don't want to have like small profits. You'll have the day to trade on. What makes it high probability? It's not because of the high probability this strategy is very successful. The daily pin bar strategy, guys. It's because of the risk and reward. That I can discuss with you guys at a later stage. It's not a pin bar that's make it successful strategy. It is a risk and reward. It's 60%. It's not a successful strategy. The success is 60% only, right? 40% you'll have stop loss trigger. But because of this risk and reward, it's 100% successful because of the profitability. Your stop losses will be on daily time from 74, 54, 74, 54. But the day she will go into your favor, 400 pips, 430 pips, 460 pips, 220 pips. So your profit taking will be bigger than the losses. And that's what the key is here in this strategy. But again, you have to be consistent with the strategy. So unless you're really not going to use it consistently, there's no point in even touching it, guys. But anyways, so the second way of marking and the trade the pin bar is, give me a minute, guys. Okay. Okay, guys, the second way is to put a spending order above the pin bar, guys, 10 pips and stop loss again below. The third is 50%. Put a pending order at 50% of the pin bar, guys. That is where your pending order will be stop loss below the pin bar. Everybody understand this? Say yes if you understand, guys. Pending orders below the pin bar, 50%. At 50% of the pin bar, guys, what happens normally? This is 70% probability. The price always returns to 50 limit. That's right. Returns, trigger, and continuation to the upside. Or she will go and hit your stop loss. Either way, guys, what will happen? You'll have a small stop loss trigger. So these are the three ways to trade the pin bars by the books rules. There is no fourth way, guys. My advice is you will be trading a simple method, which is close. The pin bar closes, you open the trade on the next candle. Understand, everyone? The first one. So do you guys completely understand three methods of trading the pin bar, guys? So if anybody questions you how to trade the pin bars, you should know by now what are the three methods of trading the pin bar, guys. This is the knowledge that you need to have. It shows you understanding, knowledge, and professionalism as far as the rules are concerned, trading the pin bars. Okay. No, Khan, I'm not. No, this is the trade number one here. Okay, give me a minute. Give me a minute, guys. Just give me a minute, guys. Okay, guys. So this is the method. So always, so the at reversal trades, try to look for double bottoms, double tops. If you got a pin bar as engulfing candles next to them, it's a good trade, guys. Understand, everyone? So you will be taking the trade on the second touch of double bottoms and double tops, guys, and you will be looking at the second touch a pin bar, guys. So on the first touch, if you have a pin bar, guys, you will not take a trade. That is a reference, and wait for the second touch. Whatever you have on the second touch, it doesn't matter if it's engulfing or a pin bar. You can trigger the trade based on the first pin bar on the first touch. So as long as you have a pin bar, but that sets the tune, guys. Understand, everyone? So pin bars, engulfing candles, candles with a strong body. These are good trades, guys. Say yes if you understand that. Okay, now the second trade, the trade number two is continuation trade, guys. So have what happened, Brianna? Come on. Brianna, what is the confusion? That is right. I'm going to come onto that in a second. Yes. Bullish pin bars have a pin at the bottom and bearish pin bars have a pin on the top. You understand? The bullish pin bar has a pin rejection on the bottom, guys. Rejected by the buyers. Buyers push the price up and the pin was formed. On the bearish ones, the sellers push the price down and the pin was formed on the head. Makes sense? Brianna, it brings clarity to you now. I remember you took a trade on the opposite pin bar. Remember, it doesn't matter, the color doesn't matter. No, the pin bar matters. Again, focus on the pin bar. Rejection. The buyers push the price down, the sellers push the price up. Sorry, the buyers push the price up, the sellers push the price down. And there is a rejection by the sellers, a bearish pin bar formation on the head. The buyers were pushing the price up, sellers were pushing the price down, and buyers managed to push the price up. The pin bar was formed, which is a bearish bullish pin bar showing the strength of the buyers. So buying pin bars will always be at the bottom. Selling pin bars will always be on the head. Understand this? Just keep it simple. Head and bottom. That is it. Everybody understand? Say yes, please. Okay, guys. Now, continuation trade rules. Rules of continuation. Rules of reversal. Double on significant levels. Double tops. Double bottoms. Confirms the bottoms. Confirms the reversal. Never take a trade without them. Forget taking trades because when you have high probability trading setups, you can trade heavy on them. Make sense, guys? You can trade heavy because your success rate is good. Make sense? If your success rate isn't good, you can't trade heavy because likelihood is you will be having losses at often. So when you have less losses, high probability setups, I can go heavy. That is the advantage to be selective in your trading rather just keep on jumping into the market all the time. Okay. The second trade is continuation trades. Guys, have the clarity of the rules. Continuation trade might not have double tops and double bottoms, right? They don't have them. Yes or no? Anyone? They normally don't have double tops, double bottoms. Continuation trade, guys. Okay. Okay, guys. So, guys, agree with me? Okay. Now, in the double tops and double bottoms, you will take first of all 2 o'clock trades and 4 o'clock trades only, guys. 2 o'clock and 4 o'clock trades only. Guys, understand this. You will always take 2 o'clock and 4 o'clock trades, guys. Understand? Say yes, please. Okay, what does 2 o'clock mean? Now go back and see your wristwatches, guys. Somebody takes a wristwatch and see where 2 o'clock is. 2 o'clock is a continuation trade in an uptrend, guys. 2 o'clock. 2 o'clock. This is 2 o'clock up. Directional. 2 o'clock directional trade, guys. 2 o'clock, right? Understand? Everybody clear on this? 4 o'clock is a bearish directional trade, bearish trade, guys, selling trade. See, 4 o'clock, 4 o'clock in a downtrend. Give me a minute. Okay, so you guys understand 2 or 4 o'clock, right? Everybody understand, right? Rules remains the same. Pin bar, you see a pin bar, guys. You will take a trade on the next candle and stop loss below the pin bar. Simple as. Understand, everybody? Everybody understand? Say yes. Okay, guys. Now let's go back. Okay, guys. Now I want you to. I'm going to show you the practical demonstration of that, guys. So I'm going to introduce you to few indicators now, that system that you needs to use, which brings more confluences in your trading, particularly helping you to take pick bottoms, and gives you more confidence in picking the bottoms and the tops, and also confidence in the reversal trade, guys. Okay, guys. Bollinger Band, guys. BB, everybody know this, right? It is a trend indicator, guys. Bollinger Bands, guys. Customize the setting by 130, please. 130 period, guys. I had developed it myself, guys. I started with 89, ended up at 130, by the way. It took me 7 months. So 130, please, everybody. Everyone, fix it to 130, please. Everybody understand this? Say yes. Bollinger Bands 130, please. Simple. Just write it down, guys. I'll give you a minute. Now, deviation will be standard, Brianna, which is 2. Only you need to change the period, which is 130, which is customized, please. I've used this for, I tried different periods when I was working in the bank, and 130 is the best, which works effectively. So I want you guys to use 130 period, please. That is it. Leave the deviation at 2, guys. So if everybody has done it, please confirm me. Yes, it works all time frame. Just wait and see what I'm doing, right, guys? Okay. That is it. Can you see it? Okay, guys. Can you see this, right? Guys, remember the principle, the basic principle. Let me introduce you to this indicator. The basic principle is when the price is in the upper band, touching the upper band, likelihood is the price will reverse, because this is an exhaust level, right? The price can reverse if the price is touching at the upper band, because the price can reverse. And the price, if reverse from the upper band, it will take its journey to the middle band, guys. Understand this? Do you guys understand? Simple. And if it breaches the middle band, the journey will be to the lower band, guys. Simple as. The probability of this is 73%, guys. This is 73% directional probability, by the way, which is handsome, which is extraordinary, guys. Now remember, this is a lagging indicator. It develops with the price. It is calculating an average of 130 periods. That's what the problem is. Now, guys, just try and understand this. You will not use it in isolation. You will use it as an add-on with your double tops and double bottoms when picking the trade from the upper on or the lower band, guys. Understand this? You guys understand what I'm saying, right? Upper and lower bands will be your reversal trades most probably. So you will be waiting for double tops and double bottom formation on the upper band and the lower band, and plus normal point of reaction and failures, then take a trade. But this, it will give you the confidence, guys. Further add on that the price has established a lag, completed its previous lag, and going to make a reversal. Understand, everyone? Say yes, please. Keep it light on your charts so you do not focus so much on it, please. Please. This is not something you trade with. This is an add-on, but very effective add-on. Okay, next principle is this. If the price is above the middle band, we are in the bullish trend. And if the price is below the middle band, we are in a bearish trend. Understand, guys? You guys understand? So if the price is above the bullish band, above the middle band, use it as a bearish trend, bullish trend. And if it below the middle band, consider it as a bearish trend. But again, it depends. That will most likely be if you're trading on a daily time frame, guys. Can you see this? But if you're trading 4 hours, it's pretty difficult to establish a trend on 4 hours, guys. 4 hours pretty much be like trading within a trend which is on the daily time frame. To see the trendy picture, I rather suggest go on a daily time frame to establish, or a weekly time frame to establish your trend, guys. Can you see this, guys? The trend changes. It never returns above the band on the weekly time frame. Yes, yes, guys. Okay, so guys, just use it within your trading. It will give you add-on confluences, very effective. 73% is statistical probability, which is handsome. Also, now add two moving averages. Forget 8 and 12, guys. Two moving averages. First is 10 EMA, guys. Exponential moving average is 10, and the second is 25 exponential moving average, guys. What it means, I don't understand what you said, Boston. Both exponential, that's right, both of them. 10,
Could you say again? What's the first one again? What's the explanation
10, 10,
for it?
10, 10, 10, 10.
10. Okay, 10.
Yeah.
And close, right?
Close, your close would never change, it's just 10.
What about the second one? 25, you say?
25, that's right.
Okay.
Guys, how are you gonna take the trade? I'm gonna show you. 4 o'clock trade. I'm gonna show you how to take a 4 o'clock trade. 4 o'clock trade will be when pin bar closes above either the 10 or a 12. The pin bar body closes above the 10 or a 12 on a bullish or a 2 o'clock trade. Pin bar closes above, the body closes above the moving averages, which is 10 and 25 in an uptrend. Again, guys, this is add on. This is not the way to trade. The way to trade will always be with your moving averages, with your reference line channels, right? Normally you're trading with that. This is extra add on into entering into the trade, guys. Understand? Do you guys understand, right? Let me give you a good example of that. This candle closes above, the body almost closes above the moving averages, right? This is my reference line as normal. Let's say I want to jump into the trade. I will be, my entries now, your entries trade as normally I've said in lecture 2, guys. Reference line, channels, point of failures, reactions. But forget, when it comes to entries, follow the rules that I'm setting it up based on the indicators, guys. So what will happening? You will not be deviating from rules anymore then. You will not be applying your mind anymore then. All you will be applying the rules that I've laid down for you guys using the indicators. But again, it doesn't mean you ignore the price action. Understand, guys? See, this pin bar closes above the moving average, slightly above. I will take a trade. I won't take a trade on this pin bar, guys. This is not a tradable pin bar, guys. Though the price went up, I don't care. I will not take my entry. My entry will be on this, or the best entry will be on this.
You have to wait for a retest, Wakwa?
No, you have a pin bar. You can. What did I say as far as the entries are concerned? You see a close of the pin bar, you take a trade on the next candle. Understand? There is no retest here. Make sense? Guys, do you understand, right? I understand. I'm showing you the continuation trade. I understand this. Again, never take a continuation trade if the resistance is right above. The possibility is the price will go as the resistance falls back. Make sure you have a room to the upside, guys. Understand, everyone? Now I'm going to show you a 4 o'clock trade, guys. 4 o'clock trade, which is a bearish trade in the falling market, sell trade will always have a pin bar on the head, guys. That is your trade. Your stop loss goes above it, guys, like this. Make sense? 4 o'clock trade, guys. This is not a 4 o'clock trade. Tell me, Brianna, just see, the pin bar is on the head. We are doing the buying trade, a bullish trading here. So 4 o'clock trade is 2 o'clock trade is here. This makes sense. 2 o'clock trade. 4 o'clock is this. In 4 o'clock, the moving averages act as resistance, and in 2 o'clock, the moving averages act as support. Understand? Simple. Pin bar, guys, resistance. These moving averages acting as resistance. Boston, 4 o'clock, right? That's 2 o'clock. That's 2 o'clock, right? That's 2 o'clock, right? That's 2 o'clock, right? Entries will always be on the bloody pin bars above the moving averages. You will automatically have 85% success rate, guys. And the beauty of this is this: your risk and reward will be 1 3 and 1 4, guys, because your stop loss go right below the pin bar. Understand? Say yes. I'm I'm trying to clear the noise out of your trade entries and make them more precise and more selective, right? And this is the way to make it more selective. Now forget the candlesticks, other candlesticks patterns. Yeah, it can go up to try this. Yeah, exactly. It is. I'm giving you the stats based on the back testing in the bank. Yes, it will be. It will be. See this, guys. Pin bar, pin bar above the moving averages. I'll take a buy straight away, right? So guys, let me give you example. This pin bar, I won't take a trade on this pin bar, guys. Tell me the reason. This is a bearish pin bar, right? But why wouldn't I take a trade on this? Anyone? Boston, you. Boston, speak up. Why wouldn't you take a trade on this? Exactly, it's above the moving averages, and we are in a 2 o'clock market, guys. Simple. 2 o'clock market is a bullish market, right? You're not going to take a trade on this. Again, let me show you more entries. I'm showing you the entries, guys. You can keep on entering again and again based on pin bars. Make sense? Pin bar, guys. Pin bar, guys. Pin bar, guys. But it does not mean that you will just trade based on pin bar, guys. You will have your reference line like this. You will have normal charts trading the way I teach you guys to trade. All you need is to be selective now on your trading. That is in entries. Entries, I'm trying to make them selective for you guys. Understand? So look, I'm going to take a trade based on the resistance here, as the support here, plus the pin bar formation above the. It is a high probability trading setup. Then makes sense. They are trading setups, yes, but this becomes high probability trading setup, guys, and that's why it worked. 86%, 85, 86%, 85. Let's say I missed the trade. I want to enter into the trade. Let's say if I could find the trade for myself. You don't find the trade, you don't take a trade. The rules are pretty simple, guys. You don't find a trade, you don't take a trade. Do not be like jumping into the trade, guys. You don't find a trade, you don't take a trade. It's very simple. It's pretty simple, guys. You don't take a trade, you don't find a trade, you don't take a trade. Simple. That's a pin bar, guys. The market went up. And I'm going to show you the double tops, double bottom formation, guys. See the reversal trade. The price came down, the price hit the band, lower band, right? Wait for the double bottom, guys. Price make a double bottom, right? right? The price went up. The price started its journey from this, went exactly to hit the middle band, right, guys? Can you see this? Rejected from the middle band back to this. The pin bar, guys, this is the first pin bar bottom. I won't take a trade after this. What I said, always wait for the double bottoms and double tops, guys. You will take a trade after. If it doesn't close, the body doesn't close above it, my advice is not take a trade. It's not a high probability trade, guys. Bullish engulfing, you can take a trade on this. But this pin bar is controlling, and then again you will have this, guys. Understand? Reference line, that's right. This is your reference line as normal, right? Trade normally. The entries has to be. So this pin bar is a controlling pin bar on this double bottom, guys. After I see this pin bar, guys, I'll wait for the double bottom. Price holds, reference line, I'll take a trade. Went to the upside. Can you see this? My entries and exits will be on pin bar after the pin bar, guys. Simple as my entries will be after the pin bars. Pretty simple. Use the band. It helps you. It helps you guys to trade into the direction. Oh, classic. This is classic, guys. Continuation trades are the difficult one normally people say, right? Tops and bottoms are easier at times, right? Makes sense. But it doesn't mean their price is near the resistance and you see a pin bar closing on the moving average, you take a trade. Absolutely not. What I said, pin bar is an add-on. The moving averages is an add-on, right? So it's not. It doesn't mean that you will always take a trade. You would take a trade just see a pin bar, moving average, take a trade. You need to see the whole picture where the price is, what level the price is, near the resistance, near the support. From your trading, whatever you've learned, I'm trying to condense it to two candlesticks patterns, pin bars and bullish engulfing candles, bearish engulfing candles. Simple as continuation trade. Try to take a trade on pin bars when the price closes above the pin bar, guys. It is more likely that the price will continuation to the upside. Understand, guys? Stop loss always below the pin bar, guys. Does everybody understand? Say yes if you understand, guys. Okay, just give me a minute. Risk and reward is pretty good. Even if you try on a minute time frame, the risk and reward is pretty good, guys. I just wait for the price. I see a nice pin bar, guys. Oh, this is classic. Stop loss above it. Let's see. All you need is, guys, 2 3 trades, and that's all you need in a week. Risk and reward is pretty good, guys. 222. Stop loss was like 60 80 pips. Risk and reward will always be amazing using the pin bar strategy, guys. Simple as. But guys, again, don't judge yourself based on. You need to follow the rules. Apply it again and again. If you apply them 10 times on your charts, right, you will have 4 winners and 6 losing trades, guys. You will be 100% in profit. Remember this. 100% in profit if you utilize this strategy 10 times. Consistency of entry by the rules, consistency of entry by the rules. Automatically, guys, you will be in profit. Automatically, you will be in profit. Even if you have 4 winning trades, normally the percentage is 8 out of 10 trades will be success trades, guys. Understand this. So guys, do not judge yourself on a single trade. When I start, okay, let's say today I woke up and I want to trade with the pin bar strategy, for instance. Let's go to the 15 minutes time frame, for instance. My advice is use it on a 1 hour H1, H4, and daily time frame, guys. The reason is there's so much noise on a shorter time frame. The price will keep on dipping below the pin bar, below the moving averages. We have to go to 3 and 6 moving EMAs to trade 15 minutes time frame, not 10 and 25. My advice is focus on what I've given you here. Again, you find a nice pin bar, guys, on a Bollinger Band bottom, guys. Beautiful. This is classic. This is just classic. This is just classic, right? I'll take a trade reference line. Beautiful trade. See this, guys? Again, the price went to the middle band, right? Middle band, it's breached the middle band. Pin bar closes above the moving averages. I know personally the price next station will be the upper band, right? See what happened? Boom up, right? Yes. The price being rejected, came to the middle band, went up, rejected. This is the bottom, right? Oh, this is nice. Pin bar, sort of pin bar, right? Above the moving averages. The price is breaching the middle band. Let's see if the price can go to the upper bands. Exactly what happens. Can you see this? So bands really effectively work. This will increase you. They will tell you the possible directional boundaries of the price action. Make sense, guys? It also helps you to exit your trades as well, guys. But guys, lecture one, markup, support and resistance, trade as normal. What I've teach you guys. Only the now it comes to the candlesticks. Use the pin bars and engulfing, pin bars and engulfing. Two reversal trades, reversal trades, reversal trade, double bar tops, double bottoms, pin bar formation, bottom of the lower and upper band of the Bollinger Band. Simple rules. 2 o'clock, 4 o'clock trades. Yes, you can do on mark on H1. It's fine. You can do it H1. And the continuation trade, guys, in an uptrend, 2 o'clock trades. How you take a 2 o'clock trades, guys? Pin bar close above, a body closes above the moving averages 10 and 25. Either of them you take a trade on. And in a bearish market, 4 o'clock, pin bar closing below the moving averages. Remember, in an uptrend, the pin bar will be on the bottom of the candle. The body will be above the bottom. The pin bar will be at the bottom. In a bearish candlesticks patterns, guys, the pin bar will always be above. The body will be below, guys. Understand? Please tell me if you guys completely understand. Brianna, do you understand? Zain, Manish, not Jared, good. Lorenzo, Joseph, Justin, Khan, okay, Mike, Manish, Kristen, do you understand? Steve, Tal, do you understand, right? Guys, now go back to your trading again. Give it a week. Try this and come back to me. I want everyone to come back to me next week. Come up, guys. Now something I want you to do this sometime. Something, guys. You will never be able to improve your trading unless you do this. What I'm going to show you guys. I've asked one of my students, Richard, to do this, and he have done it. I have looked at it. I had criticized his trades. I given guys. Whenever you take a trade, I want to see this weekly. This. Do you understand? Do you guys understand this? Please say if you can see this, right? If you, guys, whenever you take a trade, I want to see this. What happened? And I want to see the results, simple as honest results written underneath. I don't weekly. Every week you will have a one word file for every week. If you because what happens, I can go back and reflect on your trades and tell you where you went wrong. And by reflecting again and again every week, eliminating the mistakes, automatically your entries will improve suddenly. Entries will never improve if you don't scrutinize them, if you do not counsel them, if you do not address the issues, guys. And how you can address the issues? By documenting them like this. So please, everyone who's trading on a demo account, guys, start doing this. I want to see this. Because what happens? He took a trade like this, he lost 29 pips, guys. You need to be honest with yourself where you close the trade, where you take a loss. I told him, right? He took a trade after the break of this trend line, but there was a point of failure right above. So he shouldn't even have taken a trade on this. He should have waited for the price to break the point of failure here, then took a trade. One mistake. Second, his trend line wasn't right. Trend line has to be meeting this point of failure. So the trend line was also not right. So hence he hasn't implemented the trade fall because he didn't read the price action correctly. So it wasn't his fault as far as knowledge is concerned. So we find it, eliminate it, eradicate it. Next time he'll be focusing on these mistakes and won't be repeating them again. Next trade. Beautifully took a trade. Stop loss just below 56 pips he made, right? Simple. So I can see. Remember, your entries are very few. The entries are very fewer. I don't have like extraordinary entries every day. The successful traders have same entries again and again and again and again and again and again, and that's how you guys have to do. Make sense? See, excellent. This trade, PinBar guys, reference line. I asked him to add the reference line, take a trade. He made 38 pips. See on this one. Excellent. This is what I want to see. PinBar guys. Now you will add Bollinger Band around it. You will have moving averages around it, right? Exactly. Quality over quantity Zen helps you to increase the volume. That's why I say learn to make quality 100 pips every week. When you have that bloody confidence in yourself, then you can trade with any volume. Make sense? Make sense, guys? So unless you have documented like this and come back to me, you will want to come back to me for a year with this Vakar end of the week. This is what I did. These are the trades. Please see why I have a losing trade. I don't mind helping you guys coming back with the documented trades and ask my opinion and criticism. Trust me, I'm here to help you guys. But if you're coming back with a verbal reasoning, then I cannot see the disease to eliminate this disease, right? Eradicate the disease. I need to see what went wrong, and how can I see this without document your trade's been documented, right? Start doing this every day, every week, every week, every week, every week, every week. Automatically your trading will improve, guys. Your entries will improve. All you need is to improve your entries now. Entries and exits, entries and exits, entries and exits, isn't it? Say yes. Say yes who have completed my training. Say yes, please. Come on. Make sense what I'm saying. You can't do this, forget trading. Forget trading. Go back to your house, do the jobs, guys. Forget trading if you can't do this. You think I've teach you the training, given you the training and you can be a successful trader? That's bullshit. You can never be a successful trader. You need to improve it every day, improve it. How you can improve it without documenting the trades and reflecting on them? This is what we call counseling. In any company, when you work, you have counseling sessions every after 3 months, prep talks every after 3 months to review your performance, right? Without that review, the company cannot improve in quality of the service of its employees productivity. Make sense? Make sense? So please, I know none of you do this, right? How many have done this like this? How many of you? Honestly speaking. Good. So please, guys, start doing these two things, what I've given you today. You need to start this. Had you guys have started this last year without me, you would definitely have improved your trading. You don't even, because tell me, do you not feel that you've done the same mistake when you take a losing trade? You've done it before. Have you not felt like this way? Brianna, this is far better. This is easy. All you do is copy paste. Take a picture, copy paste here. Just copy paste on the Word document and save the document on your computer. You make a notes on the charts, it's fine, but keep the charts clean. Just make a notes like this. It's easier because the person who's reading your charts, I can see the clarity on the charts, right? Yes, it's recorded. I'll send you the recording tomorrow. Yes, it's recorded. Guys, unless I cannot see this, I cannot help you. You will be a patient coming to my clinic who is not telling me where the problem is, what the disease is, where the pain is. How can I help you guys? How can I help you with when I do not have the tools to diagnose you? Guys, make sense? So this is the way I can see where the problem is every week, right? Where you can see where the problem is every week, right? Make sense? Please confirm by saying yes if you understand this. Very important what I'm discussing with you guys. This is I'm trying to make you a better trader now. You completed my basic training, that's good enough. I've sent you to the charts, feel of it. Feel of it. You feel the markets. You're profitable, non-profitable at times. But I'm trying to do something which will make you a profitable trader, which is this, what I'm trying to do. This is the exercise. This is the training that you need to eradicate the mistakes out of your trading, emotions out of your trading, be more rule oriented trader, and a logbook where you can reflect on your mistakes. How you improve your trading is by eradicating your mistakes stages by stages, stages by stages, stages by stages. Make sense? Make sense? I cannot emphasize on this enough unless I start yelling at you guys. I'm not feeling well, honestly speaking. I had a very severe pain, but I'm only speaking to you guys so that you guys can improve your trading. It is more frustrating for me when knowing that you are not profitable, guys. Make sense? And you're struggling. You cannot waste your time with me and on this Skype group and with stock market if you can't become profitable in few months. Where you're wasting your time. You are lying to yourself then. Then leave this and do something productive. Trust me, this you are addicted to something which isn't working for you, and then you're wasting your money and energy. And even if you say you're on demo accounts, and guys, time is more precious money than the money itself. Makes sense? Please understand this. What I'm saying makes sense. The time lifeline would stop at some stage. You need to be productive at it. So let's make it productive and try work it for ourselves instead. You don't want to be like after 8 months I'll ask you how's Khan, and Khan's gonna say I'm still learning. Actually, I'm still learning. I was busy, I didn't do this, but I'm still learning. Please, Khan. It's pretty much like I entered into university when I was 23 and you meet me when I was 43 and I was saying, yeah, in the final year now. I'm still learning. Actually, I'm in the final year and I'm in age 43. Just imagine, I'm embarrassed. Please, so I'm enemy of myself because mentally I'm stuck to a fact that I will graduate one day. For fuck the education, then the fact is I can't pass the examination. I start doing some vocational training or something else then. If I still stuck to the bloody university age of 45, thinking every year I will pass the following year, next year, and not eradicating the problems and mistakes and hurdles which are obstacles which are staying there, I'm destroying not only myself, also the people connected with me, and this destruction is worse than the destruction of the university. The example I'm giving, because this destruction will also bring the destruction of your funds and money, not only the time. Make sense? The destruction is that you're not only making the funds, then you will losing your savings, plus you're losing the time, right? So this is a complete ultimate destruction of yourself. So make it work for you. I'm trying to give you the tools, ammunitions to work, but you need to be precisely follow my instructions. You're not following my instructions, forget yourself becoming a consistent profitable trader. Listen, you will, I'm not saying you will not be profitable trader. Many of you are making profits, right? I agree. I hope most of you have had the winning trades, make a lot of money at times, but consistent profitable trader are only 13%, and profitable traders are amongst that pool of 87%. Make sense? Make sense? So guys, be precise. Now if you're showing me next Friday, I want to see everyone sending me a PDF, Word document, everyone with their names on it. I'm going to send you the email address. You're going to email me that PDF, right? Word document on Friday. Try it for next 2-3 days, whatever the days left in this week. On Friday, I will review everyone on the weekend and send you my remarks underneath, right? But guys, remember, if I be honest, every trade I need on it. Be honest. If you're not honest, you're lying to yourself, not lying to me. First of all, you know you're your own enemy. If I see a PDF or a trade picture with the trade executed without the rules that I've given, you will see me yelling at you guys. I don't care how many trades you take, how many trades. I don't give a damn how many trades you take, as long as you take the trades by the rules. And also one more thing, very important. A lot of you now will be start thinking, Wakar says trade 2 pairs. Now he's saying be selective, taking trades on pin bars. How many times pin bars will be formed? Fewer times during the day. So we're missing out a lot of trades. There are not going to be so many opportunities, right? That's a lot of you people are thinking now. Yes or no? I'm sure a lot of people are thinking. Be honest with me. Now I'm saying to be selective on trading. Obviously, there's going to be less trading opportunities, right? And just 2-3 pairs then. Yes? Guys, say yes if I'm wrong, or if I'm right, say yes, please. Another questions come to the mind. Now, guys, all I'm saying is increase the instrument you're trading. Go to 10 trade pairs. Increase the instrument of your trading. Open up 10 pairs. It doesn't matter. Open up 10 pairs. Instrument doesn't matter. What now? All you need is on those 10 instrument, browse them every hour. If you're trading H1, browse them every after H1 candle close. See which can after H1 hours closes, the candle closes. Go to the instrument 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Browse them. Wherever you seek an opportunity, just take a trade, guys. That's it. Make sense? H4, every after 4 hours, browse your instruments, guys. Simple as. Out of 10, if you're trading H4, increase the instrument to 15, guys. You will have the same number of trades, the way you're going to have same number of trades on H1 with 10 instruments. Increase the instrument this time. Instrument. So the mindset that I might have less trades now. Oh, I'm gonna have less trades. Oh, this is wrong. I'm not gonna have less trades now. I should have taken a trade on this candle. But if I follow a car saying pin bars, I'm gonna have less trades. Oh my God, the feeling, we gonna kill this feeling by increasing the number of instruments we are trading. Understand, guys? Make sense? So I've answered this question as well, which might come to your mind. Yes or no? Okay, guys, this is the end of the lecture. Please let me know if you enjoy it and if you completely understand this. And this will literally take your trading to another level if you follow my instructions now. I'm trying, you have cleaned the house already. I am doing the final touch now to shine it better. I'm trying to shine it now. You already did the cleaning by learning, by completing my course, training on the demo accounts. Now let's make it extraordinarily shining. Let's make it very clean, very extraordinarily clean by doing the final touch-ups here. These are the touch-ups, guys. Focus and stick with the bloody rules that I've laid out for you guys. You can never become a trader without following my rules, guys. Simple as. If you cannot learn from me and be profitable, forget yourself becoming profitable by learning from another instructor. I can promise you this. The reason is they're not going to teach you better what I'm teaching you, and they're not going to invest that amount of time and money, time and also money. Yes, my time is also money on you guys, right? With this purity and having a true intention of helping you out to be profitable. Ask me the question again. I forgot. I didn't see the question. You use the chart support and resistance. You have to mark your charts as lecture 1. Without marking your charts as lecture, I said what I said. You marked your charts first. Lecture 1 and 2 has to be respected while trading this, guys, please. Lecture 1 and 2 complete. Only this is add-on that I've given you and make you selective whilst picking up the candlesticks. Understand, guys? Lecture 1 and 2. You need to set up your charts, weekly zones, point of failures and reaction on daily. Then kick on on the H4 on H1 time frame, guys. Understand? Take a trade, reference line, counter trend line, guys. Simple as, channeled as it is. Only now you're opening a trade on a candlestick. Simple as. On the pin bars, after the pin bar, guys. That's it. In 4 o'clock, 2 o'clock continuation trades, to 4 o'clock, 2 o'clock, candle closing above it, below the moving averages. Bottoms, guys. Bollinger Bands, lower band, upper band, guys. Double tops, double bottoms, pin bar, guys. That is it. Understand? Simple rules, simple rules, simple rules. That's it. Try utilizing it every day. Document your trading. Next week, I'll see more. Take out the mistakes. The following week, take out more mistakes out of it. The following week, another scrutiny. Eventually, you'll master the art. You will master the art without having your minds applying mind to it. All you see, you apply it. That's it. You don't have to think into it. Yes? And another thing, you take 6 losses, 4 profit, you will be in 100% profit. So make sure you use a stop loss, guys. So I think this is enough. I hope this will help you guys to improve your trading. And you need to practice this and document exactly the way Richard has done it. I really like this. You take a trade, you write something on the top, right? A time as well, and then write the results at the bottom. How many pips you have made, guys. Start doing this practice with 5 charts and see your results, guys. You can try it on H1. Do not go below H1. The problem is below H1 the price spikes. Obviously again and again will spike. Moving averages are for H4 and H1 time frame. Actually, if you go to H1, 15 minutes, you need to change the moving averages, guys. Those moving averages are not very effective because effectively work on the lower time frame. The problem is the noise is too much, so we don't even use moving averages when trading shorter time frame, guys. But H1 and H4 we can use this. Test it on Neddy. I've got an EA trades on the same principle that I've given you. He is 83% profitable. I've been using him 3.5 years. I've never had a losing week, guys. On average, make 2,500 to 4,000 pips a month, guys. Stop loss is maximum goes up to 60, 65 pips on H4. When it trades H4, I set it out. I say trade H4 time frame. I leave it on. It trades H4. I leave it on H1. It trades H1. Look, I don't care when the pin bar forms. Honestly speaking, they just form. Yes, normally the pin bar forms whenever the session begins. London, American, or Asian, it doesn't matter. Any session when begins the first 3 hours, the pin bar forms. You will see reversal and continuation, guys. Yes, but forget the noise of the timing for sake. Just follow what you see on the charts. Don't focus on the time. Just see what's given on the chart. Right now, I show you the practical example of it. Right? I didn't give this example by looking at the time frame, right? Instead, I gave the example by looking what in front of me on the charts, right? So you need to focus what in front of you on the charts, right? So guys, if everybody understand, finally say yes before we finish this webinar, please. You guys enjoy this? It will improve your trading. It will improve your trading, guys. Try this for the next few days and let me know your results. Let me know your results. Let me know your results. And I want to see on weekend documented document like this, which has your trades on, so that I can review them and see what the problem is. But please, honestly, put every trade on it. Do not lie to yourself. If you're lying to yourself, be selective and putting the trades on, documenting the trades. You are lying to your doctor. If the doctor you lie, never lie to your doctor and your lawyer, guys. If you lie to your lawyer, you'll go to the jail, and if you lie to your doctor, eventually you die. So it's pretty simple, guys. Simple, right? Okay, thank you very much, and I hope you enjoy this webinar, guys. Practice and get back to me by the end of the week. Thank you.